Hi folks, David Waring here again with InformedTrades.com and the next video in a series on trading the economic crisis by Simit Patel. In our last video, Simit gave us a good overview of the inflation versus deflation argument. In today's video, we're going to begin a new section of this series where Simit is going to explore several markets where traders can express their inflation or deflation bias, starting with today's video on gold. So let's get started.
Okay, to understand why gold is a way to protect yourself in the event of an economic crisis, particularly a currency crisis, we can start by looking at economic history and how economies first evolved. And before there was paper money and coins that people used to trade and shop and make purchases and sort of manage their wealth, people bartered. So, for instance, if I made coffee beans and you made cotton, we may be able to do a trade if I wanted cotton and you wanted coffee beans. Of course, the problem with barter economies is that there needs to be a mutual advantage. So in the example I gave, we could only do a cotton for coffee trade if you wanted the coffee beans that I was making and if I wanted the cotton that you were producing. So what naturally arose in barter economies is that the thing or the commodity that was easiest to trade would become money. So for instance, let's say I had coffee beans and you were making cotton, but let's say you didn't really want coffee beans. You may still accept it. You may still accept the coffee beans that I was offering in exchange for cotton if you thought you could take those coffee beans and easily trade them for something else that you did want. And if you look on the screen now, there's a picture of cigarettes, vodka, and beads, trinkets, and those are all examples of currencies that have arisen in barter economies. In fact, in many prisons now, where they don't really have money, but people still feel a desire to trade or can exchange favors and things like that, cigarettes are still used as a form of currency. And they'll even be accepted by people who aren't smokers because the non-smokers will take them knowing that they can trade them for something else that they may want. In the currency crisis in Russia in the late 90s, they saw bottles of vodka become a currency. And people would trade that for things that they want. Now, throughout time, barter economies have repeatedly chosen gold as the currency that has arisen. So gold is sort of the natural currency that has arisen out of barter economies, and this is something that's been true throughout the world and throughout history. Many other commodities have been tried, and gold has sort of always been chosen. So it has a sort of rich history, and sort of there's a psychological attachment as well to gold because it's been the monetary commodity of choice for so long. In terms of why the market chose gold repeatedly, it's because gold has some attributes that make it really perfect or ideal for being a form of money. One is that it's pretty portable, easy to take around. The other one, that it's storable. It does not deteriorate over time, which makes it conducive to saving and accruing wealth and making investments and credit and allowing an economy to grow. Easy to count, which makes it just very simple for doing transactions. Easy to divide, which sort of goes along with being easy to count. You can do small transactions as well as larger transactions with it. Naturally scarce, which is a key element and something that we're always reminded of when the currency is being significantly devalued. As one of the principal reasons the currency is going to be significantly devalued is when there's too much of it, too much money has been created. With gold, that doesn't really happen because it's naturally scarce. So that's one of its most important attributes. And hard to counterfeit, which all sort of ties into being naturally scarce. It's hard to counterfeit, and that sort of keeps its supply limited as well as keeping the economy more honest. And sort of tying into how gold has been with us for so long, or sort of the first currency that arose, even the U.S. dollar was once pegged to gold. Prior to the Great Depression, the price of or $20 was always convertible for an ounce of gold. So if you had $20, you knew that you can get an ounce of gold for it, and that sort of instituted some monetary discipline in the sense that the government always needed to make sure that they could not they could honor that exchange. That if someone wanted to cash in their $20 for an ounce of gold, they could do so. After the Great Depression, it was repriced to $35 an ounce, and then in 1971, the gold standard was fully abolished, and there was no peg. On the screen now, you can see a $100 gold certificate, which was in circulation in the early part of the 20th century, which shows that $100 in gold shows that sort of gold was money here in the United States not that long ago. So really, that monetary history of gold being a money is something that really has been with us for a while and is not as archaic as many would think. And even still, now that we know how much of a history gold has, even still now when there's problems with the paper currencies, the fiat currencies that governments issue, the market still naturally tends to gravitate towards gold as sort of a way they can to hedge themselves against currency risk, knowing that in a worst case scenario they could always trade gold coins if they absolutely needed to. That's obviously not preferable, but it is sort of an option, and it is an insurance policy of sorts. So even as this current crisis in the United States has unfolded, we've seen central banks increase their gold positions. So we're seeing the largest banks in the world, the banks that literally make money and trade with each other, they still keep gold and are increasing their gold positions as a form of trust and security. So that's another thing that sort of makes sense. If you're seeing the biggest money movers increase their gold position, well, that's the kind of thing that can move the market and sort of shows that the big money is behind it, which increases the value of it, or at least it increases the psychological attachment of it and the likelihood that it can actually be a real currency and a viable store of wealth that society will agree upon using. Also, if you think about what's been going on with the dollar, this is a longer term trend. So actually, if you look at the dollar against the euro or against many other foreign currencies, it's been devaluing for a while now. You could go back to 1999 or pretty much since the euro was conceived. The dollar has been falling in value against those currencies. We saw a little bit of a strengthening in the dollar in the second half of 2008. But even now, it's sort of back on that trend where prices are rising. And during this time, if you look at that chart of gold on the screen, you can see gold's been rising steadily. So as the dollar's been falling, gold is rising. That also sort of confirms that gold is a way to preserve your wealth in the event that the currency is being devalued. That's about it. There are plenty of ways that you can get in on gold, and if you're looking to discuss those more, if you have any questions, you can join us at informedtrades.com. Thanks a lot, and next time we'll be back with some other strategies on how you can protect and grow your wealth during this economic crisis. Take care.